All right, everyone, we're going to get started here. A big thanks to the team at Allocations and Kingsley for joining today. We're going to talk about SPVs, how you can incorporate SPVs if you're running a fund as part of your fund strategy, and we'll get started here. And this is being recorded, by the way, so we'll recap that again. But first of all, I want to welcome Kingsley. Kingsley is a founder himself, an investor early into crypto. Kingsley, I'll give you a couple other kind of minutes to introduce yourself, and we'll get started.
Sure, thank you, Mike. Yeah, so discovered crypto in 2011. I was super into peer-to-peer file sharing, and discovered Bitcoin at about $4. It was pretty hard to buy at the time, so I wasn't able to buy any. Then it went up to $14, and I kind of really researched Bitcoin white paper and crypto. But it wasn't until 2013 when I actually had some savings. At the time, I was interning at IBM, and I saw the price go up to $1,000, and I said, yeah, I want to buy some. So invested some of my savings, and really that was one of my earliest kind of investments into the private markets. Then 2016, I got access to another SPV into Monzo, and Monzo's a British online bank. I just invested a few K, but it did 100x. And it was then that I saw the power for SPVs to really enable economic freedom. And then next year, 2017, I founded an angel group. We were writing checks on Slack. We were doing crowdsourced due diligence, and we were doing a ton of SPVs. And another company we bet on was Zilliqa, which was a blockchain that did about a 50x. And through the SPV that we did, we were able to come in for different check sizes. Some people came in for 500K, some people came in for $1 million. I went in for about 50K. Some people came in for 1K, but really saw how SPVs could democratize investing and enable smaller investors to participate. Then 2019, we were doing so many SPVs that we were our angel group was breaking the other SPV platforms just due to our high volume and velocity of deals. And so a team spun out of the angel group and founded Allocations in 2019. And then since then, in under 3 years, platform has grown to close to $1 billion in assets and over 1,000 SPVs managed on the platform.
That's awesome. Yeah, so let's talk about Allocations for a second too. So just so our audience is familiar, by the way, I'm Mike, founder of Visible, for those of you that I don't know. And I guess for Allocations, can you use just a quick rundown of the different products and services that you guys offer?
Sure, yeah. So our most popular product is SPVs, and we have set SPVs up in as fast as 3 hours. We have the fastest SPVs in the market, and they're also 10 times more customizable than the other providers. So, for example, we facilitate crypto SPVs, secondary SPVs, SPVs into other SPVs, SPVs into funds. We partnered with MicroAcquire to do SPVs to acquire companies. We recently did SPV into public stock, really SPV into anything. And also we offer a fund product that is super well priced in the market and simplified.
Awesome. We're definitely gonna get into some of the SPVs, how, what, and where. Just a couple quick notes to everyone. Bella on our team, she's a panelist here, so feel free to write into us with any questions. We'll do our best to either answer real time if it's relevant to the content we're talking about, or we'll wrap it up at the end with a general Q&A. So feel free to throw any of those. And then, yes, we are recording this. So we will share this out usually within 2 days after. We'll do a write-up with the highlights. We'll link to any resources we talk about and the recording itself. So be on the lookout for that if you registered, and feel free to share with anyone else. And then today, we're going to cover, we've been talking about SPVs. What are they? We'll run through a fact sheet with some data that's provided by Allocations. We'll talk about why now, and then 5 benefits of creating a hybrid strategy. I know a lot of our customers are GPs and funds, and talking about a hybrid strategy. And then we'll wrap, kind of teasing some new products coming out from Allocations. Just to kick us off, Kingsley, can we talk about, just in layman's terms, what an SPV is? What's the history and when they started becoming popular?
Sure, definitely, yeah. So SPVs are special purpose vehicles. They're used for group investments. So, you can have, basically they're LLCs, mostly Delaware LLCs, that you can invest small amounts of capital into that then go to invest in a private asset. So the history, I think Delaware formed LLC, I can't remember exactly, but it's something like the 1990s. And then I think in the early 2000s, they came up with this master series structure. And this really was a tipping point in the market, because previously to set up standalone LLCs for each SPV were, pretty price prohibitive. But the series structure enabled you to just use one master series and have sub LLCs to really reduce cost and to segregate the investment for each LLC. So, and especially in the last 2 or 3 years, there's been the emergence of these digital platforms like Allocations that have democratized these SPVs. I'd say historically, you'd need to raise at least $1 million into an SPV to make it cost efficient. But we recently did an SPV for 10K. So a 10K SPV charged like a 2.5K fee. So we're really seeing this emergence of micro SPVs and the democratization of group investments.
Yeah, that's awesome. Who do you think is most excited by SPVs right now? Is it founders? Is it GPs? Is it family offices, angel groups? Like, I know a lot of people use it. Like, who do you think is the most excited? Yeah,
everyone. Well, the most interesting part though has been the institutions. I've getting a lot of institutions ringing me up asking, how do we do SPVs? So I think that eventually institutions will need to offer their clients SPVs to remain competitive. So, if your bank, offers you bonds or, public market stocks, imagine if they offered you a SpaceX SPV or more private market deals, you'd be more willing to buy their products. Yeah. So really, I think the next few years, we'll see institutions coming into the space to democratize these vehicles for their clients.
Yeah, awesome. Talking about kind of the fact sheets, and you mentioned, historically $1 million was the kind of threshold to make it worth it. Can you walk us through kind of this fact sheet? This is data on your own platform for ranging from average check sizes to minimums to the average SPV values. Would love to kind of just get your talk track about some of this data that you guys have gotten through your own platform.
Sure, yeah. So average SPV value around 670K. They've ranged from as small as 10K to, I think we did like a $30 million SPV. So really range in size. We have seen the average SPV value going down over time, which is great because it shows that it's getting democratized to invest in private assets. Average number of investors 10. Again, we've seen as small as 1 or 2 investors to as large as 200 in an SPV. Average check size about 50K. This number we've seen decreasing over time as more people get access to SPVs. Typical minimum check size we see around 10K, but again, the fund manager can customize this, and it can be as low as 1K. Percentage collecting management fees. So we typically see fund managers, when they're just getting started, charge lower fees and typically charge less management fee and more carry. So I think, yeah. And I think that's pretty important if you're getting started as a fund manager, to not obsess too much on price, but really to focus on getting really high quality deals for your investors, and being very sensitive on price. Days to form. So again, historically it would take months to set up SPVs, but we recently did one in as fast as 3 hours.
That's awesome. What's like the one thing that's surprising to you? You mentioned, check size is going down, as well as SPV value, meaning more people are participating, which is great. What is like the most surprising thing to you about this data set now that you guys have been doing this for over 3 years?
Yeah, it's a good question. I would say a data point that isn't there, like the smallest SPV size, like when we started in 2019, it wasn't clear that we could do a 10K SPV, but we're seeing this micro SPV segment increase, and I think it really shows how far the field has gone to democratize investing. What's
the give me like the use case of like the 10K SPV? Like how did that come to be?
Yeah. So we're actually just about to do a case study on it, so it should be coming out soon. But I believe it was to invest in a something like the Robin Hood of Africa.
Okay. So
just to see these types of international investments where the check size is probably lower. Somewhere like Africa, the average SPV would be average SPV size would be a lot lower. As we see more international investment in SPVs, the cost and the size becomes increasingly important.
Yeah, that's incredible. What about like timing? Talk to us about, are SPVs here to stay? There's been a lot of economic changes, obviously, recently, or even just like reading, if you're on Twitter, talking about the just startup environment changing. How do you think SPVs will change given what's happening, more recently? LPs are saying they're reducing commitments to VC. Like, how will that affect, SPVs, whether, a positive or negative?
Sure, and there's a good question, and I recently did a tweet on this where, firstly, SPVs are a long-term trend. We're going to see more and more traditional VCs and institutions add SPVs as a product. Historically, they just provide funds to invest in, but increasingly LPs and investors want to have direct deal access. They want to invest in blockbuster deals. They want to double down on exposure to certain deals, and they want to have more flexibility. So SPVs are definitely here to stay, and I actually think we're just getting started in terms of the adoption of SPVs. So secondly, on the market, I would say that there will likely be more SPVs set up, especially as VCs cut the number of checks that they write. I think SPVs will be used to raise capital from family and friends, from high net worths, from family offices. I think the average SPV size will go down as there's smaller deals going into companies. And I think the percentage of SPVs closed will go down as well, with just general less private investment in a recession. But yeah, generally SPVs are a long-term trend, and I think we'll also see novel cases of SPVs in a down market. For example, micro SPVs. We'll see more secondary SPVs as well, and more complex SPVs like SPV and SPV.
Yeah. This quote I think is interesting from Katerina. She was one of the founders of Flickr and Hunch. She talks about Y Combinator are inventing the safe, and SPVs are like safe for VCs. I think this resonated with our quote or our team, and we want to highlight it. Like, how do you think about what do you agree with this? Like from what Katerina's saying, I imagine you do. Love to get your take on this.
Definitely, definitely agree. Safes really revolutionized fundraising. I would say I would omit the word VC at the end. I would say like for investors, because when we speak to VCs, not many of there's small, mid, and large. I'd say the mid and large aren't doing a lot of SPVs. I'd say it's more of the emerging VCs and the smaller VCs, more of the angel groups, more of the family offices. So I definitely agree that SPVs are democratizing investing, similar to how safes democratize fundraising.
Yeah, awesome. We're going to run through 5 benefits. This is content that you guys can all find on Allocations website, and we'll make sure to link to it here in our recap. But let's first run through kind of how specialist SPVs can increase your assets under management, and maybe we'll just run through the 3 questions here as Kingsley. So, like, first of all, why you mentioned emerging managers as kind of one of the core customers or users. How is this beneficial? If I'm a GP, how should I think about leveraging SPVs, especially if I'm on my first fund or maybe second?
Definitely. So for an emerging manager, you really want to start small and just get started. And SPVs are a great way to start on a deal by deal basis and bring deals to your investor community. We've seen that LPs and investors prefer to, they're more willing to invest in an SPV than a fund. So what we typically see is emerging managers starting off by doing, 5 to 10 SPVs and then launching a fund. Again, this is beneficial to scale your AUM. When you talk about your AUM as a fund, you kind of blend it in. So let's say a fund has $1 billion in AUM, that may be 80% SPVs, 20% funds. So, AUM is a pretty important metric for a GP that's getting started. And it's a great way to, SPVs are a great way to get started and scale your AUM.
Investors also thinking about using these, maybe not tied. What if maybe I have a specific mandate? I'm only investing in vertical SaaS, for example. Definitely, have you ever seen investors use these, like maybe not, they see an opportunity outside of your traditional sweet spot, and are they leveraging an SPV for maybe capital from current LPs, but also ones that are maybe not in the fund?
Definitely, yeah. We do see a lot of opportunistic SPVs where a fund manager will get access to a deal that may not fit within the fund's investment thesis, and they spin up an SPV to invest.
Okay, cool. We'll move on to the second point here, increasing number of LPs. So, I think if you talk to a lot of fund managers and GPs or people on the ops side, like investor relationship management is already hard enough, right? Chasing, capital calls, tracking that, distributing K1s, like, with SPVs, you're naturally increasing your number of LPs. And it's sometimes challenging managing all of that. Why is increasing the number of LPs a good thing?
Yeah, definitely. So first of all, you want to build your community of investors if you're getting started as an emerging manager, and more investors is better. And you'll find that you'll have investors that come in for smaller checks, maybe 5K, 10K, 50K, 100K. But as they build that relationship with you, they'll tend to increase their check size. So it's super important to scale your LP community. I know increasingly there's tools like Visible that really enable you to manage investor relations at scale. Yeah,
I love that. What do you see the difference between, like, because you guys have a fund product and some insight there, like what what do you see for like number? I think 10 was like average, right? Size for how many LPs are in SPV. What do you see? How does that compare to a traditional
Yeah.
fund? And how do you leverage that to help you establish credibility?
Yeah, probably 20 to 30 average per fund. But again, as an emerging manager, you think about your LP community as a whole, and you have some investors that are generally interested, some that have invested in your SPVs, and some that have invested in your fund. So I kind of think it's all one kind of big pool, and you're just building a community for these investors and providing access to great deal flow.
Yeah, I think kind of moving on to the third point, I think this one for me is, I think, the most fascinating because you might be able to get access if you're a founder or angel investor, but then there's like the actual check size, where check sizes, historically back in the day might have been 50K plus, and now we're seeing check sizes as low as $500. Let's talk about like how that is kind of an interesting trend, and like what is like the lowest check size. I know we teased this out a little bit, but kind of just a quick FYI for our audience, like what's the lowest check size? What type of background do you need to be accredited, unaccredited? And then like talk about like the shift in demographic of people that are investing now that you can get in these lower in these deals with lower check size.
Definitely. So lowest check size, really that's up to the fund manager to decide. The smallest fund someone's done, so smallest SPV, I believe it was 10K, and smallest fund was 150K. And that simply was not possible, just a few years ago. So just incredible how the space has been democratized. Type of background check. So investors need to be accredited to participate in 506B offerings. And also we do comprehensive KYC AML on the investors into these private funds. Demographic of people investing. So I would say there's more angels. Historically, to invest in private markets, you'd need to be a VC fund with a lot of AUM. But we're seeing angels, and angels look a lot differently now. You have a lot of people that have their main jobs, but on the side they do angel investing, and super excited to see that trend to continue over the next decade. As everyone can become an angel investor.
Yeah, love that. And then talking about co-investing, and we mentioned that a little bit. How are LPs excited by these offerings, right? Of hey, I'm already an investor in your fund, and now I'm hitting you up with this outside opportunity. Like how do you balance that, and talk to us through that relationship there?
Yeah, so I'd say like the small to mid-size LPs are more opportunistic and love to get into SPVs. If you have institutions that come into your fund, I'm sure there's more like more rules that they'd have on SPVs or things like that. But for emerging managers, LPs typically love SPVs.
Yeah.
Yeah.
No, go ahead.
Oh, no, I was going to say, just on the second point, I have seen larger funds that have more institutional capital from, say, endowments. There is some way to, for example, as a fund manager, you can gift the carry from your SPV portfolio to the fund, so that the fund actually, fund performance includes the SPV performance. So that's a way I've seen the larger funds kind of manage any particular conflict of interest.
Gotcha. Interesting. And then finally, the last point you guys wrote about is SPVs increasing support for portfolio companies. Like how do SPVs tactically increase support for your companies? I think there's like a really interesting kind of parallel with Visible here, right? Like if I'm creating touch points with my investors and sending out investor updates, I'm always top of mind, getting the most help, getting actionable tactical things from my investor group. How is that leverage with SPVs? How are they able to help portfolio companies, and how do you control that flow of information?
Definitely, yeah. So group investing is super important, and if let's say someone's reading, so I actually use Visible every day, and I've sent out maybe 20, 30, 40 updates. We do a monthly investor update for our investors. But for our investors, and for any portfolio company, their investors often want to do group deals, and SPVs are they're a tool to enable these group investments. So, really it enables portfolio companies to raise more capital and LPs to write smaller checks and participate in more deals and more rounds.
Yeah. What about this idea that, like, I know it's been more popularized recently, founders creating their own SPVs. How do you see that emerging? I think like the previous 2 years is incredibly popular. Founders setting their own terms, right? Pretty easy for me to set up an SPV and invite my own friends or people in and control that myself. How do you see that moving forward? And how often are founders doing this versus maybe a GP setting up a SPV for a particular portfolio company?
Yeah, it's a great question. We're seeing both. So definitely founders spinning up SPVs and GPs and LPs. So which one is better? I don't really think there's necessarily a winner. I think that just everyone is setting up SPVs now. And I generally do feel that GPs and LPs are better at rounding up investors, because they often have, they often co-invest with these investors. They can share the due diligence as well. So I think like the kind of group due diligence on a GP LP setup SPV is probably better than a founder SPV.
Yeah, but how about like if I'm raising multiple SPVs as part of my strategy, or maybe I have aspirations of becoming a proper fund manager, and you have a lot of different pools of LPs, right? Like the Venn diagram is kind of crazy because some LPs maybe participate in some and not others. How do you manage like the reporting expectation of like how often you should check in with the entire base, like per deal or per SPV? Like what is best practice for just like being tactical, how I leverage my time, but making sure I'm sharing with my whole LP base?
So for funds I've invested in, they vary from monthly updates to quarterly updates to annual updates. And I think, as a GP, just getting out some consistent rhythm of investor updates. And actually these updates, once you build the consistent rhythm, which is, the first step, you can increase the number of touch points. So for example, you can have your general, let's say, monthly LP update. And if there's portfolio company news, you can send those out as well. And generally we see like increasing the number of touch points within your LP base is super important to stay top of mind.
Yeah, I love that. We're going to wrap up here in a couple minutes. So if you have questions, write in. I got a couple already that we'll get to, but feel free to put some questions in chat. And as those come in, Kingsley, we'd love to have you talk to us about something that's coming soon with instant SPVs.
Definitely, yeah. So when we started Allocations in 2019, our angel group was breaking the other platforms. We had a need for speed, and we had deals closing super fast. So we've really been working on making SPVs faster and faster. And so instant SPVs will be super important for the industry, so that you never lose another deal, and that you get into fast closing allocations.
Yeah, awesome.
So stay tuned.
And what's the best way if I'm interested in allocations? Just go to your website, start there, or great.
And you can actually, there's self-service setup. So we're the first in the industry to do self-service setup. So it could be a Sunday night and you can spin up an SPV. I've actually found a lot of people were spinning up SPVs on the weekends. And so the real innovation in the industry to have self-service private fund formation.
Awesome. Make sure to check that out. We'll get into some questions here and wrap up. Julian wrote in earlier. So this is the first kind of technical question, but can your platform handle private debt funds for SPVs?
Yes. So we do support private debt funds and SPVs. You know, and increasingly we'll see more debt SPVs. I think this, you know, in the down market, you know, I'm excited to see the types of SPVs that our clients create. But debt will definitely, we're seeing more and more requests for debt SPVs.
Yeah. What about requirements for like location? You talked about Africa a little bit in international deals. Like, can I be based anywhere in the world and get set up in allocations? Like, what does a company need to be based in a certain place? Like, talk to us about location.
Yeah, so there are some just general restrictions under US banking laws. For example, I think, you know, Russia is not permitted. But I think we have a full list on the website. We do have a lot of international investors that are not based in the US. So for example, in Europe or, you know, other continents that set up on allocations with Delaware SPVs. Why Delaware? Delaware is probably the most common and most easily understood in the world for SPVs. And for secondaries, you know, the language is, you know, pretty simple to do secondary transactions. We have also done SPVs that have invested into international companies, for example, into Europe.
Yeah, there you have it. And what about kind of similar to debt? John wrote in, have you seen a rise in SPVs for alternative credit?
Yeah, I mean, definitely on the debt side, we're seeing more interest in debt SPVs.
Awesome. And then last question here before we wrap up. Talking about venture, you know, a benefit of a fund is, you know, LPs are pretty much exposed to all your deals. Venture is a power law game. A couple of companies are going to return that versus SPVs where, you know, LPs can opt in or out on a deal by deal basis. Like, how as a fund manager should I think about like balancing that and managing that with my LPs? Like, hey, you want to like best practices for trying to get them to participate in all of these, especially when I'm getting started, right? Like, have any tips or tricks for managing that?
So you mean building out your investor community?
Yeah, just like investor community, right? Like I want to make sure, like if venture's a power law game, I want to make sure all my LPs participate in all my SPVs.
Yeah. So yeah, I think the nature of SPVs means that it's optional. So if the investor likes a deal, they'll come in. So I think just having blockbuster deals is really important for a fund manager, and you know, really having a defined thesis. So for example, investing in US defense or investing in AI, and really building a community of LPs that kind of align with your investment strategy is super important. You know, other than that, we've seen some of our clients set up their own Slack groups with their LPs to keep them updated on portfolio company performance, on new deals and new offerings. So yeah, super important to nurture your community of investors. Also awesome. Visible on, you know, sending out regular updates, and you know, I think we'll see that increasing, especially as LPs get more picky with their investments. They want to not just invest, but feel part of the investment.
Yeah, absolutely. Well, that's going to wrap it up here, everyone. Thanks for everyone for joining. Kingsley, thanks so much for joining us today and sharing more about everything about allocations and how SPVs are certainly a way of the future. We'll send out this recording in the next couple of days, and we'll talk to everyone soon.
Thanks, everyone.
All right. See you, everyone.